You are listening to Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco, and today I am talking about how Facebook is down big. We'll get right to that in just a moment, but before we do, a friendly reminder to follow this podcast on Apple Podcasts and Spotify. If you haven't already, it just takes a few seconds. It's totally free, and by doing so, you will never miss an episode. Every time a new episode is uploaded, you will have it in your feed. The headline from the Financial Times reads, "Investors wipe almost $200 billion from value of Facebook owner Meta." And what this is talking about, or what this is stemming from, is Facebook's earnings call yesterday and then their news around their earnings. I am a very unique expert at all things Facebook. Some of you know this. The last 6, 7, or 8 years, one of the things that's taken up the majority of my time is I've scaled countless brands on Facebook advertising. So I've been someone who's been brought in as like a secret weapon to crack the code on how to make Facebook advertising not only work for them, but then work for them at scale, meaning if they want to double, triple, quadruple, quintuple it, I don't even know how to say that, but if they want to up the budget big time, that they can continue to cost efficiently acquire new customers. And that's something that I happen to be, I believe, the best in the world at, and the numbers seem to indicate that, but not that wins me any, no one's rushing and crowding me in the streets asking for my autograph for that. And I'm not saying this in any sort of cocky way. It's just what I do for work, and it gives me a really unique perspective here on this Facebook news. I've also been a Facebook shareholder since, it's one of the first stocks I ever bought when I started investing my own money back in what it would have been 2013 or 2014. I think I sold some Facebook on the news that Apple was rolling out these privacy changes because I understood what that meant for Facebook's competitive advantage. But I've not, the stocks that I bought or the shares I bought of Facebook back in 2013 or 2014, I've never touched, and I don't plan to. It's just it's a long-term compounder. So let's talk a little bit about this news, and then I'll give you my perspective here, or at least the first take of my perspective. According to Mark Zuckerberg and the folks at Meta, one of the reasons they've cited for why their first quarter revenues, I don't know why I'm saying first quarter, because this is the earnings. This is wrong. I'm using my notes here. I should just go off my memory. We're talking about fourth quarter profits. So the reason fourth quarter profits were squeezed a little bit is in part because there's other platforms like TikTok, and it's much more difficult for Facebook to personalize ads than it was prior to these Apple iOS changes. The other thing I'll mention is there's also been an overreaction among marketers and advertisers thinking that these changes that Apple's rolled out only affect Facebook. And so what I've noticed from my vantage point is that brands are much more willing or interested in trying to allocate their marketing dollars or advertising dollars to other channels in addition to Facebook. What was happening before the iOS changes was that, as a performance-based marketer or performance-based advertiser, you're able to report back to the client or the brand and say, hey, sorry, I'm looking at people dropping comments as I'm talking, which I need to not do because I lose my train of thought. You're able to say to a client, hey, we've spent X number of dollars, and the best performance we're seeing, measurably speaking, the measurable performance that we're seeing that's best is coming from, let's say Facebook and, I don't know, let's just say Facebook. And by Facebook, I mean Facebook, Instagram, everything under that umbrella. Well, what the brand does is the CMO is they will market, or they will put more dollars towards the channels that are performing best, because just like you're allocating capital, right? You want to put your money where you're going to get the best return. Now, Facebook isn't necessarily not delivering the best return anymore. It's just not as easy to measure as it was prior to these changes. So that lends room for people to say, hey, we should diversify our mix. We should put some of these dollars on Reddit, some of these dollars on, let's say, Snapchat. Who knows? I go down the list here. The thing that's lost on people is that these changes affect all companies that relied on any sort of personalization data. It's not just Facebook. It's just because Facebook is the dominant player. I mean, Facebook has, and this is not perfect, but let's call it 90% of the social media advertising market. So, $9 out of $10 goes to Facebook. So this obviously affects them the most. But this idea that Facebook was, egregiously overpriced, I mean, I'm just surprised a little bit at how how much overcorrection there seems to be happening. At the end of the day, Facebook has so many advantages for them. They can figure this out. I'm dealing with something right now with a client where we're aggressively trying to figure out how to scale on Facebook. There's no lack of interest in Facebook for an advertising platform. The challenge that Facebook has that someone like Google doesn't have, because Google had their earnings and the stock was just, the market loved it. Google has a different set of data that they're dependent on. Google has intent data. When you search for something, you're telling Google what your intention is, right? If you've ever seen the movie, I'm not recommending the movie, but there was a movie, I think from the 90s with Mel Gibson called What Women Want, where I think he gets struck by lightning and then he can hear what women are thinking. And this gives him an enormous advantage. He's an advertiser or like an ad man. So it gives him a huge advantage. And, because he's able to put himself really in the shoes of the consumer and speak to exactly what it is that they are needing, but not necessarily saying, et cetera, et cetera. That's what Google has. That's why Google is so powerful. When you search for something, Google can show you things that are going to be relevant to you based on what you search because you're telling Google what you're thinking. With Facebook, when you go on Facebook or Instagram, like you do, we'll use Instagram because we're on IG Live right now. But when you go on Instagram, the results that you see, you might not think of them as results. Let's say, let me back this up. I'm caffeinated, so this is why I'm freestyling. So here we go. Google search. You search for something, Google shows you, let's say 10 results on the first page. And those results usually lead you to find something to click through or tap through on because it's relevant to your search query. It comes from a source that you believe is authoritative, and the rest is history, or the rest goes how it goes. On Facebook, the first 10 results are not search results. Those first 10 posts that you see on your Instagram feed are coming based on deep learning models that are predicting what you'll interact with. And what they're using, like the candidates they have of what to show you, is based on content that users, advertisers, brands have generated recently that you have not yet seen on your feed. So those two outcomes require two very different types of data. This Apple privacy change has made it harder for Facebook to personalize and predict what you're going to respond to the same way that it could before that update. Because let's say if you've downloaded an app through Facebook, what you do on that app and what you do elsewhere, it gets sent back to Facebook, and it can make better predictions about maybe what other apps you'd like to see or what other kinds of content you'd like to see. Meanwhile, on Google, again, it's search queries. It's your search data. Now, some people might have different privacy settings, and that's fine. But Google just has a much easier job in terms of providing you very relevant results and a relevant product, and therefore, for advertisers, it's just a simpler business or a simpler system. Now, the system itself is not simple. What Google does is amazing, right? Like it literally indexes the entire interweb. Like everything that's ever been said on the internet is indexed by Google, and they can spit out results to you that are personalized in like a millisecond. So I'm not trying to downplay the technological feats that are happening, but just saying from an advertising standpoint, Google didn't have to deal with this privacy change in the same way that Facebook does. So that's going to be an issue for their business. And I predicted this. I called this out months ago because, I'm sitting in a really unique seat here, right? I have a great vantage point. The second thing I'd say with Facebook in general is, there's this tendency to think, and I'm seeing this now, there's this tendency to believe that things would just grow indefinitely. Like if someone's in a good category, that like year over year over year over year, it's going to be, 25% growth, 25% growth, 25% growth. And like it never ends. One of the most important things to do as an investor is, if you're looking at a particular business, is assess the total addressable market, or the TAM, the TAM. I call it TAME. I don't call it that. But yeah, the total addressable market is a very important thing to consider. Sorry, I have a dog that's getting water right now, if you can hear that. It's kind of the professional environment that I like to operate in. It's really a barn, the CMQ barn. Anyway, so that's something to think about because, yes, social media advertising and the amount of money going towards that, there's still plenty of growth left, but it's not the kind of growth that, we would have expected to see if this was 5 years ago. And that's just the nature of things. So that in part, understanding that can help you understand why Facebook would be looking for other places to create growth, whether that's with, Meta or the metaverse, I should say. Of course, Facebook has a fledgling we'll call it VR, AR business with hardware. And while that's growing, peanuts compared to the advertising business. Facebook's advertising business in 2021, it brought in over $114 billion in revenue. Think about that for a second. Like that's not like we get used to these numbers like, oh yeah, billion, whatever. No, think about that. $114 billion was generated from that business in 2021. The hardware business, meaning like Oculus and all that stuff, that's not even $1 billion in revenue a year. So it's peanuts. But again, they're investing in something that they believe is going to be relevant to their future growth. And I think as investors, if you're a long-term investor, you have to make a choice and say, is that something I agree with? Do I think it's worth doing that? Do I think Facebook has the ability? Does management have the proven track record of properly allocating that capital and getting a great return and delivering for shareholders? Or do I think there's, would have to be a miracle for this to happen, and I don't want to bet on a miracle. That's the decision you have to kind of make. But I think it's weird that the markets are so like overly responsive to this news, as if like there's a big shock here. Facebook has been talking about, the metaverse. It's been talking about the various challenges that their ad business faces. I mean, the fact that Apple, was able to disrupt their business should have been a huge. I mean, to me, I'm surprised this wasn't already priced in. I believe that the markets are relatively efficient, right? They're mostly efficient, but this is a great example where clearly the market got it wrong, because this news, based on how I read it, should not have caused today. It shouldn't be down 25% unless people don't understand the business itself. And maybe I'm being cavalier in saying that. I just don't understand. I do understand people overreact and overcorrect. So I do understand why it's happening, but I think it's divorced of the reality of the situation. As I mentioned, for those of you who are joining, I've got a really unique vantage point in the digital advertising space because, my business, I've scaled countless business on Facebook advertising. I've helped brands go from, barely being able to spend on Facebook to being able to spend 7, sometimes 8 figures a year on Facebook advertising and do so efficiently and effectively. And that's something where, being in the vantage point I've seen, I talked to so many CMOs on in a given day, really, and understand, where they're trying to allocate. It's like allocating capital, when we talk about Buffett and Munger and allocating capital within like the micro universe of marketing, there's also capital allocation happening. There's an advertising and marketing budget that has to be allocated properly to get the best return. And so, yes, the iOS news was not good for Facebook, but, those things can happen. And at the end of the day, you have to determine whether or not there's more future growth to be had. And as I said a second ago, no one should expect just indefinite growth. I mean, people are saying their daily user growth is just not what we expected. I mean, it did grow. They have 2.8 billion people using one of their apps in a given day. Like that's, this is not like a little beat up company. And I just find it funny. Like, I feel like some of these obvious things get overlooked in the models of Wall Street. And also the data they have and what people are doing on their platforms. Forget what they're doing on Apple's platforms. Facebook will figure it out. And if they don't, then, they'll fade out. But there's nothing that indicates that Facebook is operating in a way that you'd expect to see or have seen in the past from companies that were dominant and then died off. They're, again, investing aggressively in future growth. Whether or not you believe they can achieve that growth through the metaverse or not, that's another conversation. But the fact is they are not resting on their laurels. They're not getting too comfy. And, someone can make the argument that on the earnings call yesterday, Mark Zuckerberg and the team there were managing expectations. It's not great when the whole market thinks your company is just going to mint money every quarter, and mint more of it every quarter without any sort of bump along the way. So acknowledging that TikTok is a competitive threat, and competitive threat meaning for people's time, I think that's healthy. I want a management that looks at things and addresses it as it is, rather than trying to convey this like fantasy. I had at one point this is a little while ago, so don't take this as like news, but I had owned some CRM, which is Salesforce stock. And I was very turned off by how their company does their earnings calls, because it feels like a rehearsed theater show, and it just doesn't feel real. Now you could say, well, that's not enough reason to sell a stock. But at the end of the day, I did, and I have no qualms to saying that, or no problem saying that. I see a comment here from John who says Buffett wouldn't own Meta. And I agree in the reason, but I think the question then is, why wouldn't he own it? And the reason is because for Warren Buffett, he's not able to predict the earnings with a sort of certainty that he is with other businesses. That's why Berkshire had stayed away from tech stocks. It wasn't because they were old or whatever. It was because the way that they choose to invest money, which is very responsible, it requires that they can make some sort of prediction about the future, meaning the future of the company's earnings. And in a lot of tech businesses, it's just not as easy. Now, what's funny, I say that because one of the mistakes that both Charlie Munger and Warren Buffett have acknowledged making was not buying Google, despite the fact that they had a really unique vantage point on how effective Google was. And this was through Geico. I remember, and I don't know the exact quote, but I can see it in my head. Charlie Munger had talked about, with Geico, they saw the ads that they were running with Google. There was nothing more efficient, and they could keep spending more money on them. And he said that should have been the reason right there. They should have bought this stock, and they didn't. They passed on it, even though it was obvious and right in front of them. And that can happen. But expectation setting with any company you own, how big is the addressable market? If Facebook had 100% of the paid social advertising market, what would that be? Because right now they have 90% of it. So then what is that market going to look like in 5 or 10 years? What's the projected growth rate? And if Facebook can continue capturing, let's say 90% of that, what does that mean for Facebook's revenue? You can figure this stuff out. I've realized that a lot of investing, it's intimidating because you'll hear these terms like beta and, just overly kind of complicated mathematical terms that are just not common language. When in reality, most of the math you have to do investing is just basic algebra. It's addition and multiplication. It's not much. If you're multiplying and doing things like the square root, I just believe you're doing it wrong. And I think I could prove that if I really was just a stickler for it. Just going to the Wall Street Journal, some global news. Okay, so Facebook feels $10 billion sting from Apple's privacy push. If you've listened to this podcast, if you followed these lives, I was talking about this as soon as the news about the iOS privacy came out. So this would have been, if you've been a loyal follower or you just knew about this back when, that you could have seen this coming. So someone says, would you consider buying Meta today? I don't plan on buying any more of Meta because it doesn't. I just don't. If I have to make choices, right? I think it's a strong company, but I don't have any reason to buy more of it because I do think they lost their competitive advantage, or a big part of it when Apple did what they did. To me, that was a reason. Buffett had said, "I study the greatest investors of all time and try to learn, what are some of the lessons? How would they answer some of these questions?" And so one of the questions, obviously, I wanted to know an answer to was, when should I sell a stock? And Warren Buffett would say, one of the things he would say is if you've lost faith in the management or if the business has lost their competitive advantage. And it's not that Facebook isn't going to be a very healthy business, but I do feel like their competitive advantage was severely compromised by Apple's iOS news. Now, that's not making me sell what I bought back in 2013 or 2014. But as far as buying more of it, I'm not interested in buying more of it. I'm also a little skeptical on the metaverse, not because I don't think the metaverse will be a thing, but Facebook has to prove that their metaverse is the thing. And it'd be one thing if Facebook was the only company doing metaverse, but that's not the case. So there's going to be more competition for people's time. And that's something that, Facebook has to consider. But Facebook does have so much data on how people use all their products and platforms, which I believe is an advantage because they can then iterate and make products based on that, which I think, is very important. But I see a comment here that says, my lunch is about to end, but damn, this is the shit I want to hear about. I'm glad. Let me know if this is stuff you wanted to hear me talk about. And do you mean specifically my take on the market, or just tell me what that means so I'll do more of it for you? I am like a machine learning model. Tell me what to do, and I will, I'll do more of what you like. I'll do less of what you don't care for, because again, I don't, I'm not short on words, or passion for the subjects. Anyway, on that note though, where was I going with this? Facebook, Meta, the metaverse, there's more competition for just people's attention period. Think about this, right now, this is good for Facebook that you're on live right now. Sometimes it's easy to hate on these companies, and you realize, wait, these companies still do really good things. Instagram Live has been a game changer for me, not because there's a billion people in here or that I'm monetizing it, but for me, it's given me a live audience for when I'm recording stuff that might be a podcast. This is a great way for me to, just get better at having these conversations. I can kind of see from you guys, what stuff keeps you engaged. And I hear, I'm reading these comments. I find this to be really valuable. I mean, there's people from India, Kazakhstan, Pakistan, of course, the United States. This is amazing. When people want to just, like, pardon my language here, but like shit on Facebook, Facebook facilitates some pretty cool stuff. The question is, that doesn't matter though as an investor. As an investor, we have to bet on Facebook's ability to keep printing advertising money and being the dominant player in paid social advertising, which in part also requires that social media continues to be a key place or a key way that people spend their time. That seems not to be a problem for now, but Facebook is thinking about the future and going to the metaverse, which to me, that's, I'd rather see a company doing that than just getting comfortable. I saw some takes on the situation where people said, they wanted to, they really, sorry, I keep looking at the comments. So but Facebook was saying something along the lines of, or excuse me, let me say that again. People were saying that, this is my favorite part, guys. Let me slow down for a second. Take a big breath here. People will say about Facebook or any of these news, they always have their take on it. Like, it's this. And then here's one of the things I've heard. This shows you when companies stop being focused. If Facebook just focused on their ad business, TikTok wouldn't be a problem. Blah, 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 blah. That's a weak intellectual argument. Like, it's so lazy. It's a lazy argument. And if we know anything about how the world works, and I'm bringing this back to Charlie Munger about knowing the big ideas, the 100 big ideas, give or take. One of them is we live in a complex system, and everything's interacting with everything else. Things are not as simple. It's not linear. It's not, if Facebook had only just never gone to the metaverse, everything would be fine. This never would have happened. It's like TikTok. Think about this. What could they have done to stop TikTok? Like, it's not unheard of for another platform to exist. And something I was telling a friend this recently, it's hard to remember this, but if you had your iPhone, if you have an iPhone, if you had the same phone, and let's say you had to go back 5 years, you'd be blown away how slow it is. But at the time, it didn't feel slow. Now, in terms of like whether it's 5G or just the operating system, I'm not a technical expert, so I won't get into like the hardware of it. But our phones are so fast, and you can operate in multiple apps almost simultaneously. That sort of power has also empowered users to where it's not just because all their friends are on Instagram or Facebook, that doesn't mean they're now, they'll never go to another platform, because it's not hard for people to also be on another thing, right? Like, it's not weird. I have a Signal chat, a group chat on Signal with some of our CMQ investors. Like, we have a paid subscription or whatever. That's something where it's not a big ask to say, hey, this will be on Signal. But hey, I like to look at videos on TikTok, and I have Charlie Munger quotes on Instagram, and I go on Facebook to do this, because our technology is just, you can just shift around. It's not a big deal. It's not like the network effects to me are not as strong of a competitive barrier as they used to be. And I think that's something where people are like shocked, like, oh my God, how could they have let TikTok get in there? Like, TikTok was probably going to happen. And it's not like Facebook just had took their eye off the ball. I mean, they could have, but I just think it's really disingenuous and lazy when people like these pundits come on and say why this happened. Like, it was so easy to predict. Business is competitive. Like, let's just finish it with that. Business is competitive, and competition is not clean. Like, it should be. I don't mean like dirty competition, but I mean competition. It's messy. People are fighting for positions. Like, they're fighting for market share. They're fighting for mind share. They're fighting for, dollars. And in any sort of competitive environment, if someone sees something that's working, typically more people jump in and try to do it because, hey, there's money to be made there. It's not something where you can expect these companies. I think I could be wrong about this, but one of the issues is I feel like on Wall Street, and how, because the prices are set by institutional traders, right? Like, that's who's the real market. Like, we're just individuals. That's why I only play the long game, because I'm not going to win in any sort of short game. None of us are. It's like speculation is a zero-sum game. But in terms of how these prices are set, there are models that are made by investment bankers and their analysts that are, factoring in different things that can happen and like, what rate they're going to discount, future cash flows by, et cetera, et cetera, et cetera. What are interest rates? Going back to the same thing. I'm sounding like I'm trying to make it too complicated right now. But I guess the point here is, it's not like the world isn't a spreadsheet. Like businesses and the business environment is not a spreadsheet. And this idea that we could, if we just did this would not have happened. That's stupid. Like it just doesn't, like, don't listen to people who say that because they don't know what they're talking about. If someone looked at your entire life and said, if you had only done this, it would have turned into this for you. It's like, do you know how many decisions had to be made? And it's not like only your decisions affect your outcomes. It's the decisions of other people. It's the decisions of the people that those people know, and how those people that make those decisions felt because of those decisions. Like, we live in a messy, complex world. It's an interconnected system where everything's interacting. You need to take a step back and look at the big picture here. Facebook is still a dominant company. They are the dominant player in paid social advertising. They have 2.8 billion daily active users across their family of apps, which is, talk about strong brands. I mean, say what you want about Facebook, but Facebook, Instagram, WhatsApp, and then if someone just mentioned Oculus. I've used the Oculus before. It's a cool experience. I don't know what the market looks like for that. I wouldn't bet on Facebook just for that alone. But Facebook is clearly trying to have some other things going that matter to the business, that are not just reliant on social advertising. Because just like any advertising, there's the proliferation of media channels. Like when you have in digital marketing, digital advertising, that's a huge buzzword, the proliferation of channels. The trend has been historically, there's always going to be new channels that emerge that are in competition for advertising dollars. Facebook is still the dominant player, but it's good to have some other things going, but they have to invest in that future. So if they put more money and their profit margins go down because they're investing in the metaverse, yeah, that's to be expected. Now, if you're an investor and you're thinking about buying Facebook, or you're just wondering, what should I do here? Obviously, that's up to you. This is not investment advice, but your bet is on, can Facebook also crack this and continue to maintain their dominant share of social media advertising? That's the issue. It's not like, do they lose focus on their, how did TikTok sneak in? I mean, no one ever talks about this, but Facebook also competes with Netflix, competes with any streaming network, anything you watch that's not, if you're not looking at a Facebook app and you're looking at your screen, whatever you're looking at is competing with Facebook. TikTok is great for the narrative of TikTok's taking over Facebook. There should be multiple platforms and multiple, social media networks. That's kind of normal. The question is, can Facebook's business continue to thrive, strive, grow, and improve? And I don't know the answer to that question. I just think the market's overreacting. Dave, that's an awesome comment. Dave says, "Thank you, Chris. You the man. I only disagree with you when I'm wrong." That's okay. I appreciate that. And look, you guys know I never claim that I have, all the answers or anything like that. We're all making bets on the future. I try to only speak up when I really know something, but I'm humble, intellectually humble. I'm an arrogant asshole, but intellectually I'm very humble about just knowing that, look, I could be wrong, but there's a record now of the things I've predicted. So far, I'm pretty solid, but that doesn't mean I'm going to be perfect. S. Dewar says, is it possible for Meta to work around the Apple update? Yeah, there's workarounds, because I'm dealing with this right now. I'm in this space, so I have clients where, we have to figure out how to get a better read, or to get some sort of read that we can use to improve the efficacy of our advertising models. That's going to sound like jargony, but I didn't plan on talking about this. And at the end of the day, Facebook still has one of the most important advantages for all advertising, which is reach. Think about that. Like back before digital advertising, people chose where they put their advertising dollars based on reach. That was one of the big factors, meaning how many people will see this. The Super Bowl ads. One of the reasons the Super Bowl ads are so expensive is because the reach. You have however many millions of Americans glued to their TV. So it's a great place. It's an excellent piece of real estate for you to have your advertisement, right? Because you have people who are engaged and paying attention to their television screen all at the same time. So, reach matters. Facebook has reach, 2.8 billion people active, daily active. So they have reach. So even if they couldn't use anything from Apple with this privacy update, an advertiser, especially the big brands, would still need to be there because of the reach. Think about that. That's a huge advantage. Now, Facebook is still able to make predictions about what ads to show people because they know, based on our own usage data on the Facebook platform, not elsewhere, they know what you respond to. So if, let's say, for example, and if you guys wonder how Charlie Munger quotes grew, how it got so big? It's because I know this. I mean, it's not the only reason, but I crack this algorithm for a living, and I do it better than anybody else. And I'm in New York City. Like, I wouldn't be able to do what I do in New York City if that was not the case. Like, I live in there's an ad agency on every corner. So there's no way like some 34-year-old guy is going to have like a boutique agency that works with big brands just because. Like, that's not going to happen. So I say this again, not in a cocky way. Like, no one's running up to me asking for my autograph. They should be, but you get the idea. But being that that's the case, there are still ways that Facebook has to improve on what you see. So I was about to say this with Charlie Munger quotes. I'm able to there's a certain type of content that performs better than other types of content. You'll notice I will try different things from time to time because I don't want my own ideas of what works to, get stale or me to get stagnant and lose out on doing something that I wouldn't have done otherwise. Perfect example is using Reels. Like, I started making some Charlie quotes in Reels form because the algorithm loves Reels because Reels is that competition to TikTok. Not only do people respond to them and interact with that format because it's just a great format. People like doing this with videos and it gets smarter. But the algorithm also has an incentive to load up on content for that, as well as there's just not enough content being made for Reels specifically. So if you're making it, you're going to get more distribution for less. And I know that if more people see this and they check out the page and they follow, like, it's a way to keep growing. I mean, the Charlie Munger page and the audience size has so far exceeded the actual demand for Charlie Munger. Like, most people who follow the page now had never heard of Charlie Munger until they found the page, which is awesome. I'm pumped about that. But I never, we're way past, the growth slowed down after 50K because there's just less people who know or care about who Charlie Munger is. Charlie Munger is not famous like that, so it's, long story short, is Facebook knows what people like to respond to. So some advertisers might have video ads, but they might also have ads that are static images because at the end of the day, certain people are going to respond to videos more than they will respond to images and vice versa. Facebook knows that. That's really powerful. What Facebook wants, and I say Facebook meaning all of Facebook, Instagram, etc., everything, Leor, exactly. There's not a big total addressable market for Charlie Munger. Exactly. And that was the whole thing. This was never the point. I didn't start this to create a investing media empire. I'm a fan of Charlie Munger, and I knew his content, his quotes were shareable, because they connected with me in a big way, and I had a feeling that there'd be some other people out there who would have a similar reaction to them. But anyway, back to what I was saying, or I'm losing my train. I'm moving fast. Where was I going with that? I was saying with Charlie Munger, I got distracted by Leor's comment, which was a great comment. But anyway, Facebook, what Facebook knows, what they don't know. I lost my train of thought. That sucks. That happens. It'll come back. It always happens to me. My mind moves and then every now and then if I go off the direction, I'm like, what was I saying? But I think at the end of the day, Facebook is getting punished by the market a little bit unfairly. I just don't understand how these expectations weren't thought of in the first place. I don't get it. And Facebook is still a very strong and formidable advertising destination. Now, on that note, this has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. And if you have a chance and you're listening through Apple Podcasts, please leave a written review. It only takes a few minutes and it goes a very long way. Please make sure to also rate this 5 stars on Apple Podcasts. And now actually Spotify has the ability for you to rate podcasts. So please go ahead and do that. I really appreciate it. Once again, my name is Chris Franco. Thank you for listening, and we'll talk soon.